very respected and honorable Central Council member of ICAI, C.A. Rajendra Kumar sir, learned speaker of this evening, C.A. Aanchal Kapoor, Secretary of SIRC, C.A. Panaraj, participants of this evening program, very good evening to all of you. At the outset, I am extremely happy for joining once again with you all for this important program, which is need of hour. Fortunately, today we have with us the chairman of GST and Indirect Tax Committee of ICAI. On behalf of entire members of this great region, I welcome C. Rajendra Kumar sir for this evening program. Under his able leadership, GST and Indirect Tax Committee of ICAI is doing great amount of work for the benefit of the profession, particularly during this tough time. His contribution with respect to the dissemination of knowledge among the members by way of guidance note and publications enormous. On behalf of SCRC, big salute to our committee sir and you for your dedicated work for the development of the profession. I am thankful to him for he has come forward to share his rich experience in the field of GST and the contribution of a committee of ICAI to the members. I am sure we fondly called as RK sir, his presence always a value addition for any program. Today for another 2 hours, we are going to discuss the recent issues related to ITC, GST refund and fake invoicing and e-invoicing in GST. Yes, you all know already ICAI has been doing enormous programs for awareness and complaints related programs for members, even for business community across the India. Now we have reached the second level. We should concentrate and update our knowledge relating to litigations, refund, fake invoicing, and e-invoicing in GST. Hence, today we have with us C.A. Aanchal Kapoor to address this topic. And on behalf of all of you, I welcome the speaker for this evening program.
Thank you so much.
It is always a fresh thought with a practical exposure that gives the audience a new outlook on the subject. I am sure today's presentation of our young and dynamic resource person will be a great benefit each one of us. I am sure this evening session will give us a broad insight and ignite our thoughts on the subject. I am happy to welcome each one of the members who are all attending this program. Our chief guest, C. Rajendra Kumar sir, is a dynamic Central Council member of ICAI, and he occupied the highest position at a chairman of the Southern Region in the year 2008 and 9. At the age of 38, he was the second youngest person around the office of chairman of the region. He is the only Indian on the technical advisory group to the working party on 9 consumption taxes OECD headquarters in Paris, France. We used to call RK sir is the father of VAT audit in the state of Tamil Nadu. He recommended and pursued the introduction of VAT provisions in Tamil Nadu, and the Tamil Nadu government, based on his recommendations, introduced VAT audit from the year 2012. Under his leadership, the regional conference held at Chennai registered the record attendance of 4,741 delegates for the regional conference held on November 28 and 29, 2008. This is the highest in the world till date by any accounting body. This feat has been entered in the Limca Books of Record in the year 2010. Like this, he has various unique achievements, unique qualities. Due to time constraint, with this brief introduction, I request RK sir to share his thoughts and views among the viewers. Thank you, sir. Over to you.
Very esteemed, my chairman, my good friend, whom I know from his student days, K. Jalapati, our secretary of the SIRC of ICAI, and who hails from my in-laws place, C.A. Panaraj sir, erudite, intellectual, and fabulous speaker of the day, C.A. Aanchal ji Kapoor, Esteemed chartered accountant friends who are audience today, good evening to each and every one of you. It is always a pleasure to be led by Jalapati. I would always put it like that. It is a pleasure to be led by him. And the region, in spite of pandemic, in spite of the lockdown, is connected very well through his support, through his programs, through his webinars, and of course, telephone calls, which are as usual. I have known Jalapati to be a relentless worker, passionate about what he does since the day I saw him as a student studying in the reading hall of the Institute Southern Region in Nungambakam High Road. Then I was the regional council member. I used to have this habit of going to the library and going to the study hall on a daily basis. And that is how I got connected to Jalapati sir. Hailing from Coimbatore, the Manchester of India, it is in his blood. Industriousness is in his blood, and he follows that to the core. And I popularly call him Kamarajare. All of you know that Kamaraj, one of the giant leaders in the state of Tamil Nadu, was one who opened up education for everyone. He had that great love for children and education. And Jalapati is no less than that great leader. His passion for the student community, his passion for the students of government schools that they must excel, as he has himself has occupied this position, his desire that each and every person should be educated has ensured that he works relentlessly for these students. As a regional council member, he took the initiative of ensuring that a memorandum of understanding is signed by the government of Tamil Nadu and the Institute of Chartered Accountants of India to train, to educate, to handhold the government students, especially those of the commerce stream. And the then Minister of Education, the Honorable Minister, made a statement in the Assembly, the proud statement that the government of Tamil Nadu is pleased to enter the memorandum of understanding with the Institute of Chartered Accountants of India. The credit must go to Jalapati and his team. We also have here with us our Panaraj sir, a quiet leader, a person who is known for his down-to-earth personality, and a person who is well connected with what you may call chartered accountants of rural India. Hailing from Bellary, which does not boast of a huge membership, and making it to the regional council as the secretary speaks volumes of his interpersonal relationships and skills. Esteemed friends, we have here with us Aanchal Kapoor ji, who is going to speak on the topic. I will not speak on the topic hence. But the topic is ITC, refunds, fake invoice, e-invoice. Very beautifully drafted topic. Why does anyone get into fake invoice in GST? It is because of the greed of ITC and refund. That is the principal cause of getting into the fake invoice. Now, when we read in newspapers that some of them have printed fake invoices, crores of rupees of ITC has been taken, and so on and so forth, we in fact are surprised at why it is happening in India. Is India only country where these type of things happen? No. Wherever there are human beings, wherever there are taxes, there will be evasion, there will be a greed to evade. The European Union report on tax gap, that is what they call in the Western terminology, tax evasion is known as tax gap. The OECD's report says that in the European Union, the tax gap is anywhere between 19 and 21% on an average. In fact, few years before, precisely maybe in 2015 or 2016, the Spanish government came out with a scheme. The scheme was, if you want to win a prize each year, and a luxurious car that prize was, then when you buy goods, when you utilize services, you must ask for an invoice. The invoice number with your details, you must enter in the portal of the government, and each month the government will draw a lottery of the invoice number, and the person who owns that invoice will get a luxurious car. Which means the government wanted to curb tax gap in Spain, which was close to 50%. And because of this new scheme which government brought in, the revenues rose from 25 to 30%. So it is not that only in countries like India there is a tax gap or tax evasion. It is there everywhere. The same scheme was then followed by Portugal, which also was facing this tax gap situation. So friends, let us not be for a moment unhappy that, array, what is this? There is so much tax evasion in India. No, you are not the only one. Everyone is with you, or everyone is with us. Tax evasion, tax gap is not right. It is always a problem because it is at the cost of those who are honest. It is at the cost of those who pay at any cost. It is at the cost of those who work by burning their midnight oil. Very recently, the government announced the amnesty scheme. So whenever the amnesty schemes are announced, those of the professionals who work till late night, those taxpayers who dutifully deposit the tax on due date, feel hurt that what is this? What is this? Every time we have an amnesty, every time those who don't pay go scot-free. But then friends, that is what is taxation all about. The input tax credit is the very fulcrum of the GST or any VAT related tax. If there is no input tax credit, but then there is no VAT, there is no GST. But then, is ITC your right? I leave that question to you. Is ITC the right of the taxpayer, of the registered person? Our beautiful speaker is going to answer those questions today. She is going to lead us through this presentation of ITC, refunds. In fact, India as a country in GST is not known for a very liberal refund policy. Very liberal refund policy. Before the introduction of GST, I had received certain inquiry from Moscow. Being a member of the International VAT Association, one of the members of Moscow sent me an email that they want to claim refund of taxes paid in India. I said, wonderful, can you please send me the details? The details were this. There were certain people from Russia who were employed by the Embassy of Russia to work in the Embassy of Russia on certain projects in New Delhi. These employees or contract laborers were possessing restaurant bills, bar bills, barber shop invoices, and so on, where service tax was charged. So I sent an email saying that these are all consumption. These are all consumed by your people when they were in India. So these taxes belong to India. They said, no. In our country, the law is not like that. In our country, we can get refund of these taxes. That is why I say in Indian scenario, refund regulations are not that liberal. We have not even opened up the airport refunds. We have not even notified that. The the procedures and policy is yet to be in place. Whereas if you go to European Union, Singapore, UK, you can find VAT refund counters in the airport, but you don't find any in India. So refund as a mechanism of your practice is going to grow, and it's going to grow very fast. Someone was asking the other day, okay, sir, GST audit is gone. What next? No, audit has not gone. It is department which has lost the expertise of certain educated professionals like us. Now the work will be more. Now our work will be more, our expertise will be more valued. When a statute, there is a compulsion, no one values you. But then there is no compulsion and you deliver in matters like ITC, in matters like refund, in matters like classification, your worth and value before the client, the society, and the government certainly goes up. Esteemed friends, there's a lot of work there. There's a lot of opportunities available in the GST arena. And let us all, with our head held high, proclaim that this educated profession stands by the government, come what with may. This profession of intellectuals is there to implement the law that the government has notified, and with professionals and eminent faculties like Aanchal, Kapoor, and program organizing units like SIRC and of course the GST and Indirect Taxes Committee, we are here. We are second to none in ensuring that the rightful tax of the government is delivered to the government, and what is not rightful to the government is retained with the registered person. I thank the organizers, especially my very dear friend Jalapati, for giving me this wonderful opportunity of coming and speaking to you. I thank Secretary of the SIRC of ICAI for his support, and then I thank the speaker of this evening for bearing me for about 15 minutes. Thank you very much.
Thank you very much, sir, for setting the tone.
Thank you so much, sir, for sharing your views on the importance of the topic of today's discussion and highlighted the tax system in India. Sir, with your motivation and encouraging words, sure, we will do best out of best for this great region. Thank you so much, sir. I request Panaraj sir to introduce today's evening speaker.
Thank you, sir. Thank you once again, RK sir. Thank you, madam, for accepting our invitation, and welcome once again. And I take the pleasure of introducing speaker for the day, Mr. Aanchal Kapoor ji. She secured third rank all India CA entrance examination and second rank in Northern India CA entrance, and a gold medalist in BCom, and second merit ranker in BCom in Guru Nanak Dev University, third merit ranking in BCom 3 in Guru Nanak University, seventh merit ranking in 12th standard in Punjab, and also in BCom third in the university, and in 12th 7th merit in rank, and she has also secured CA final third rank all over India in P1, and also passed CA final both in first attempt. And she cleared in 2017 FAFD course also of the ICAI. And coming to her achievements, she has delivered more than 200 seminars on GST, and she has been practicing in indirect taxes for the last 10 years. And she is also faculty of various certificate courses on GST, and also she is an approved faculty of ICAI and done various certified courses on GST, including GST certificate course of ICAI. Qualified in first attempt in final CA, and also merited various levels of rank at various levels. And she is here to present her views on the GST input tax, etc. Thank you very much, and over to you, madam.
Thank you so much, sir. First of all, I'm very thankful to SIRC for giving me this opportunity to interact on this platform. This is my first one, and I hope I will be able to do the justice to the expectations. And I'm very thankful to the chairman, CA Jalapati ji, the Honorable Secretary, CA Panna ji, and none other than the presence of CA Rajendra Kumar ji himself. Sir, you talk about bearing. Each and every word from your mouth was coming like a hope. I could see such an optimistic approach of yours behind speaking that you converted a fake invoicing transaction like it's a normal, accept it. So I can see that the way you just read the topic and how you linked it. So don't panic. India is also like the other countries of the world. So whatever you are facing here, there is nothing to feel like it only happens in India. It happens everywhere in the world. And India is also one of the part of those. Great approach, sir. And the way you discuss the world economies, the way the refunds are being given, it was a pleasure listening to you, sir. And deliberating in your presence is one of my dream come true. So nothing else I can say more about it. So, and here I am to interact, and thank you to all the participants who have shown their faith in me. And I hope I will be able to justify the topic given to me. So now, without taking much time, I just share the PPT first. May I, sir? Sir, is my PPT visible?
Yes, visible, ma'am.
Okay, fine. So friends, you all can interact with me through the question answer session because it's my first for SIRCC. Let me tell you, I always interact through the chat box, through the question answer session. So more you will interact with me, the more the session will go interactive and we will be enjoying the topics together rather than me deliberating on it. I really want to feel I am there with you all. So I open my Q&A tab too so that I can see that. Okay, right. So can I see a few thumbs up before I start it? Can I, sir, your chat is visible to me in Q&A session. So please, whatever message you send me, please send through that. Right, I got that. So Mr. Gulab is the first one to give a thumbs up. Right, Mr. Vijay. So with this, friends, the first topic that I will be taking up, that's great. Great to see all of you coming up. So good. So good. Right. So friends, first topic that we will be taking up is the fake invoicing. It is one of those topics which nowadays everybody is getting the notices. Friends, it might happen. You may not have any client who has been found involved in any such sort of transaction. Just give me a while. Let me adjust your Q&A tab so that I will be able to see the screen as well. Right. So I can see all of you sending hi, ready, right, Ankuji, and all. Right. So friends, in this, what I would like to discuss with you in fake invoicing. What is fake invoicing? What we are bothered about? What is the scenario? Let's discuss it through a pictorial presentation. If I talk about the fake invoicing transaction, look, nowadays the government is also on a drive to curtail such sort of fake invoicing transactions. So even the honorable the finance minister of India, she also in her budget speech just mentioned one point about GST, and that was on fake invoicing. So if we say fake invoicing, what happens? There is a supplier, there is a receiver, and there is a mediator or a kingpin. I'm practically discussing the situation with you. What happens? Now there is a person who is a mediator, who is a kingpin. This supplier, he used to be already covered in the transaction. He used to be already covered in the transaction. And whenever a person, let me tell you first of all, there is no definition of fake invoice given in the act. And there cannot be. But for fake invoicing, we will see which transactions can fall into fake invoicing transaction. But before that, sir, is there any issue? Am I audible? Because I received a message from Mr. Anand that he's not able to hear.
No, it's fine here, ma'am. Maybe issue
It's
at
fine.
the
Mr.
final.
Anand, kindly check it at your level, please. Right.
If there is any issue,
Okay.
I'll let you know through.
Right, sir. Thank you so much. So, friends, what happens? The supplier, he was already covered in the penal provisions under section 122, subsection 1. He was already covered. And what was the penalty amount? What is the penalty amount rather? It is 100% of the tax. 100, I'm not taking the limit of 10,000 as of now because those becomes very small offenses, but otherwise it is 100% of the tax amount. The person who is a supplier found involved in any sort of fake invoicing transaction, we assume as of now, the fake invoicing means the goods or services supplied, there is no billing. Secondly, the goods or services are supplied which are under the cover of invoice which is not matching, or the goods, the invoice is being delivered, but there are no goods or services underlying. So it can be both ways. Invoice hai, no goods and services. Other way, the invoice is not there, but the goods and services are getting supplied. So this is what the fake invoice transaction, we can presume it to be, take it to be in the journal parlance, in the common parlance. If I talk about the penalty, 100%. So let's suppose if a 100 rupees transaction is caught, taxable at the rate of 18%, so Mr. Supplier, you are presumed, you are taken under section 122(1), guilty of the offense and be charged with the penal action of rupees 18. Okay, so 100 rupees, 18 rupees penal action levied on supplier. He is also liable for the prosecution. He is also under the prosecution provisions under section 132. Apart from that, under sections 83, his property can be attached, his bank balance can be attached, and so other measures can be taken against him. And likewise, the similar provisions are available in the Act for this receiver also. He is also covered under 122(1) because he has taken an ingenuine ITC. He is liable for the prosecution after a certain amount, and he's also liable for getting his bank account attached. But who used to escape? This is Mr. Kingpin or the mediator. He used to escape because he was not covered under 122 itself. The government wanted to grab this person, the kingpin, the mediator. You might have heard a number of messages, read a number of messages like now even the professional's property can be attached. Now he can also be made liable for prosecution. Yes or no? Many of you might have heard, right? But friends, let me tell you, it is not that simple. It is not that direct. There is a particular terminology which is defined as a mediator or kingpin. To catch hold of this person, the mediator, government introduced a new section 122(1)(a). So now see, the government can take penalty from supplier 18 rupees, only 100 rupees. What happened? Mr. Receiver approached Mr. Supplier. Then Mr. Supplier, I don't need any goods or services, just provide me the bill. Mr. Supplier was having the billing with him. What he did, he issued the bill to Mr. Receiver of 100 rupees taxable at the rate of 18% without supplying the goods or services. The government, when got hold of this transaction, when the department got hold of this transaction, they charged 18 rupees penalty to supplier, 18 rupees penalty to the receiver, and now 18 rupees also recoverable, same amount as to supplier and receiver, that is 100% of the tax can be charged from the mediator also. So for him, the new section 122(1)(a) came into picture. Likewise, he was covered for the prosecution provisions also. For prosecution provisions, 132, he was made party to it. Other than that, even in this budget 2021, there is a budgetary proposal for attaching the property or the bank accounts of the mediator or the kingpin. So all the repercussions that flows to the supplier and receiver now also goes to the kingpin also. he is also liable for penalty, he is also liable for prosecution, and he will be made liable for the provisional attachments also once the budgetary provisions get implemented. Now, who can be a mediator? Let's suppose, friends, I am filing the return of Mr. Fake. If I am filing the return of Mr. Fake, now I need answers from your side. Can I be made liable? Yes or no? Can I be made liable? Absolutely, Mr. Sanjay. I will be coming to your question. Definitely, sir. Yes, Mr. Sanjay has raised a very valid question that, ma'am, even on 100 rupees, the department can recover a penalty of 54 rupees, where the tax implication was only 18. Absolutely right. The penalty that can be recovered is 54. 54. Mr. Sanjay, I will discuss the tax impact also. But right now I received answers no, yes, maybe. Okay, friends, no. Directly, a person cannot be. So who is a mediator or a kingpin that can be held liable under 122(1)(a) is a person who retains the benefit of a transaction. He might have charged some commission. He might have taken some money, and two conditions with and in between, and at whose instance such transaction is conducted. And at whose instance, so all of you who said no, you are right at some point of time, that under 122(a), 1A, a person must comply with, must have committed two types of transactions. First, he must have retained the benefit, and on whose instance the transaction has been conducted can be made guilty under section 122(1)(a). Now, not only this, 122(1)(a) does not cover the huge chunk of transactions. For making the mediator, the kingpin, it can be a professional, it can be an agent, it can be an employee, it can be anything. He can be any person, right? I come to your question, Sumitraji. What will be the benefit to the supplier in case of fake invoicing? I'll let you know. Abhi, when Rajendra sir was talking, he talked about it, that the greed for the ITC, for the refunds, that can be one of the reason. A person might have. So Mitraji, I just share an instance with you. Let's suppose a person has accumulated ITC. I'm just sharing an example with you. Let's suppose a person has accumulated ITC, and it is not due to can't you see my screen? Sir,
Visible.
you people.
Screen is visible. Yeah.
Screen is visible. Is it struck?
No. It's working.
Okay, the where I have written 54 and highlighted it, it's visible, right? Okay. Now, friends, what happens that in this case, as I was discussing what the question Sumitra ji asked, in this case, what happens? The person has input tax credit accumulated, but the accumulation is not due to inverted duty rate structure. The accumulation is not due to exports. So as a result, what happens? The person is not able to take the refunds. He gives it to Mr. Y. Mr. Y just passed it on. He makes some money in between. So that's the way they can take the benefit out of such fake invoicing transactions. Other than that, if you have certain unaccounted money, in order to account for that money, you have certain cash lying with you, and you have the input tax credit lying in, you just issue the fake invoices and utilize your input tax credit and convert the unaccounted money into the accounted one. So these are the certain examples why people enter into for making the unaccounted money accounted, for getting the ITC benefits, passing on to another persons when you have accumulated ITCs. So these are some of the examples why people enter into such sort of transactions. Now, if I come to this, of course, sir, income tax. See, if we link it with income tax, definitely fake invoicing transactions are many a times entered into considering the income tax. It might be possible you have losses accumulated under you. You want income generation, you have banking loans, you want to show the sales, you enter into such sort of transactions. So some income tax reasons can also come into picture. And let me tell you, when my friends have tried linking it with the income tax, similar section 271A the draconian provisions have also been brought under income tax also to cover such sort of fake invoicing transactions. Right. So going by the topic we were discussing about, apart from the examples, 122 1A, my dear friends, covers 4 types of transactions. First, invoice is there, supply is not there. Only the bill is given, fake invoicing. Right? It happens many a times. A person says, okay, my output tax rate is, I have an ITC lying under me. I don't hesitate paying in because I can't get the refund. I enter into a sale transaction. I utilize that ITC. At the same time, I say to person, whatever is the output tax will be shared by us. Half you bear, half I bear. So these sort of transaction practically happens. So you give the invoice, you don't supply the goods. Or, my dear friends, it can also be possible, bill given to Mr. B and supply given to Mr. C. I am Mr. A. Mr. C comes to me and says, give me goods, I don't need the bill. I'm not going to pay you the taxes. I'm not going to take the bill. Okay, you supplied the goods to Mr. B. C comes, he said, do you have any bill? And now Mr. A recalls, okay, I have a bill. I have not issued that bill to that person. I issue it to Mr. C. This is again a transaction which is covered under fake invoicing transaction. Invoice, but no supply. Invoice is not there, but the goods and services are being supplied. Or invoice is not matching. The person who is taking ineligible input tax credit, fake input tax credit, not fulfilling the conditions of section 16. If you have been a person who has been found involved in any of these ISD distributing the credits, any sort of these 4 transactions, plus you have retained the benefit, plus at your instance the transaction is done, then Mr. Kingpin or mediator, you are equally liable. Right? Now, Mr. Shankar, and the question which was previously asked to me, let me come to that. Department can recover the penalty from all the 3 persons. Right? Sir, it is not unjust enrichment. Offense is committed by 3 persons, A, B, and C. The 3, if you tell me, if a murder is done by 3 persons, can you say hang only one, don't hang other 2? No. So penalty is recoverable from all the 3 persons, but where we can contest, you cannot recover the tax from all the 3 persons. Mr. Shankar, I hope you're getting what I'm saying. It is penalty can be recovered from all the 3, but you cannot recover the tax. So whenever the case of fake invoicing comes, we always contest that if the first person who is the beginner of the chain pays the tax, the entire chain goes corrected. The entire chain goes corrected. So tax is recoverable only from the first person. The entire chain goes corrected. The department cannot say to A, to B, to C to pay the taxes. Because if first person pays the tax, the section 16 conditions automatically gets covered. Right? Sanjay ji, I will be coming to that. What are the recourses if the person is genuine? Abhi, we are just discussing about the basic transaction, that how it takes place, who can be the persons that are covered into it. Right? Right. Chaliye, now we move ahead. Now, when these 3 persons were covered, now see how government caught hold of these persons. First of all, so they caught the person who is the mediator, the kingpin. Look, Mr. Kingpin, you are struck under 122 1A. Okay. Second, GSTR 3B. What this supplier used to do? What this supplier used to do? this GSTR 3B, he doesn't used to file. He used to skip 3B because tax was payable under 3B. He used to file GSTR 1. And GSTR, it used to reflect in receiver's GSTR 2A. It is GSTR 3B, right, Mr. Deepak? But what department sometimes goes for? They ask the tax from each and every person. So in the chain. So that should not be done, and that is contested, and we have come out for those purposes. Right, Mr. Rajan, I'm not discussing the questions. I'm just taking the issues which we are conversing. So it's just an interaction. I'm just on the topic itself. Right. So friends, what happens? GSTR 3B, this Mr. Supplier, he never used to file, or he used to skip that. Government said, you are filing your GSTR 1, but you are not filing your GSTR 3B. It is reflecting in two-way also. So Mr. Receiver, he was getting the refunds easily. He was getting the refunds easily because it was reflecting in his two-way. Mr. Supplier was not caught yet. So government came up with a provision. Look, Mr. Supplier, if you are not filing your 3B, you cannot file your GSTR 1. If you are not filing your 3B, how long? For 2 months or for 1 quarter. If you keep your GSTR 3B pending, I will not allow you to file your GSTR 1. So GSTR 1 got blocked. I think so. Everybody can see the word blocked I have written. The screen is moving, right? So they said that it will be blocked. GSTR 3B will be blocked if you will not file your GSTR 1. GSTR 1 get blocked if you don't file your GSTR 3B. Likewise, now what supplier did? He used to file 3B. He used to file 3B, but with a differentiated amount. What does we mean by the term differentiated amount? He used to file 3B. He used to file 3B equals to, let's suppose, 500 rupees. Thank you, Mr. Rajagopalan. So 3B with 500 rupees and GSTR 1 with 1 lakh rupees. So friends, firstly, what he was doing, he was only not filing 3B. The government blocked GSTR 1 also, that you cannot do. Now the problem of credit will arise. What he did, he filed a 3B. So he escaped the first one. He filed his 3B with just 500 liability and GSTR 1 with a liability of 1 lakh rupees. The government curtailed this transaction also and said, look, Mr. Supplier, if your 3B, if your GSTR 1 and 3B are not matching means if your GSTR 1 is showing excess tax as to your GSTR 1, your number can be liable for cancellation under Rule 21 or suspension under Rule 21A. So see, from all the angles, the government tried to plug the transaction. The mediator got covered. The 3B not filing was stopped by bringing in the provision that GSTR 1 will also be blocked. These all changes came effect from 1st January 2021. Cancellation rule also came into picture that your number will be cancelled or it can be suspended if your GSTR 3B liability is less than your GSTR 1 liability. And moreover, the government brought in Rule 86B also. Now, what used to happen, friends? The person, he used to have a huge amount of ITC underlying. It can be a genuine, it can be a fake ITC. So whatever ITC amount he used to do, how he used to plan the transaction, ITC 100, output tax 80 rupees. He used to adjust the entire output tax from the input available. Government stopped it. See, when the liability is in few lakhs of rupees, then 1% may turn out to be a small amount. But when the scams runs into 500 crores, 700 crores, the 1% amount is even a huge amount. So this rule 86B was particularly brought into to curb the practices of fake invoicing. And they said, now you cannot do so. What he cannot do so? 180. You cannot use entire 100 rupees, entire 80 rupees from your input tax credit. No, you cannot do so. So at least 1%, yani rupees 8, you must have to pay in the 1% of the output tax. You must have to pay it in cash. 99% you can use your ITC. So see, in the fake invoicing transaction, 122(1)(a) introduced, blockage done, 3B versus 1 comparison and cancellation suspension brought in, and rule 86B brought in, mentioning that you cannot use 100% of your credit for paying your output tax, but it will be restricted up to 99%. 1% must be paid in cash only. And my dear friends, when in such sort of transactions, we many a times found that the numbers were taken in the name of some rickshaw vendors, some persons who cannot even afford to. So in that situation, paying even 1% was a big task. So this rule, although can bother, 86B can bother some loss-making companies, because 86B में कुछ exceptions भी हैं. There are certain exceptions that we will be covering when we will be discussing ITC provisions. I will be covering 86B with practical examples also, like for the new startups, for the loss-making companies, 86B bothers. But the main intention behind it was to get hold of the fake invoicing transactions. Now, the question comes, what should we do if a person comes to us or our client calls us and says, I have received a summon, I have received a notice. Sir, the party genuinely mentions, I have received a notice. Whether it is a notice or a summon has to be checked by the person who is an expert. That, okay, you have received that document, send that to me. Now see how it works and how we should proceed for it. Friends, talking about the fake invoicing transaction, first of all, there is no definition of fake invoicing given, that we have already discussed, but it is an economic offense. Sir also, while in the starting words which he shared with us, he particularly mentioned it is a grave offense, right? It is an economic offense. Now let me ask you a question. If I say that a person, Mr. B, has committed a murder, or Mr. B has entered into a transaction of fake invoicing, tell me which offense is grave, more grave? Tell me how you think that which one is a more grave offense? Murder. Okay, so I got an answer. It's the murder. My dear friend, let me tell you, the economic offenses are considered more grave, because in case of murder, there can be situations. In case of murder, you are going against one person. But when I talk about the economic offenses, that are against the entire nation, the persons who are the good taxpayers, that is an economic offense. Why I am saying so? If any of your party is found involved in any sort of fake economic transaction, like fake invoicing transaction, and you consider that it is exceeding that particular limit for arrest, please be careful while applying the anticipatory bail. Reason: in case of economic offenses, the courts are not so liberal in giving the bails. Economic offense, right, Mr. Shankar, is more grave offense. So that is why fake invoicing is not defined, but fake invoicing is an economic offense. It can be, as we already discussed, you are not giving an invoice, or you are giving an invoice without actually providing the goods or services. Now, first of all, when your client says he has received some summon, he has received some notice, which we are right now receiving in our offices, and we are like, okay, let me ask you, my client first of all asked me, can you appear on my behalf? I ask you, if one of your party received a summon, can you appear on his behalf, or should you appear on his behalf? If the officer wants to take his statement, can you give the statement on his behalf? So keep thinking. I've given you a food for thought. Meanwhile, I've just proceed further and will answer you in the next slides to come. So friends, first of all, when you receive any summon, always check the jurisdiction of the person concerned issuing the notices or the summon. Now, and the DIN also is equally applicable. It is applicable on the summons also, because it is the GST officers who are issuing the summons. So DIN is also applicable. Please check. Otherwise, at the initial stage itself, the notice, the summon is liable to be quashed. So as a result, first of all, you need to check the jurisdiction. Now tell me, if I ask you, can a person receive a notice or a summon from state as well as center? State as well as center? No. You cannot have a dual jurisdiction. There are numerous judgments. You cannot have the dual jurisdiction. In beginning, friends, what happened? We received the trans 1 credit notices from center as well as state. So you are bound to reply to your jurisdictional officer, maybe center or the state. And you must intimate the other officer that this is my jurisdiction. So hence, I'm not responding to the particular notice, the summon that has been received. So you must check who is the proper officer. He must be an authorized person. Can an inspector issue? Yes, Mr. VMV sir. It is that CGST departments at present, they have not started putting the DINs there. But you can take it as a legal ground. Actually, it was through the center that the notification it was brought in. So if I talk about, you must check the proper officer first of all. Who is the proper officer? An inspector cannot issue a notice. He is not a proper officer. Cannot issue a summon. He must be at least of the officer of the cadre of the superintendent. So all these points, first of all, needs to be checked. Person cannot be put to prejudice by having the multiple assessments by the center and state. So these, first of all, we need to check the jurisdiction. It must not be a dual jurisdiction. You are not liable to answer to two. Then you must ask your client. I could see one of the question going above that, what if it is genuine? Yes, it can happen. That there can be certain issues that can be genuine. There can be certain which are fake. So first of all, you need to ask your client that please tell me correctly whether it is a genuine transaction or it is a fake transaction. If your client says, yes, I have not taken the underlying goods or services, I have not taken the particular invoice as a bogus invoice, then in that case, what is the remedy? Reverse the taxes, the inputs that have been taken along with interest. Friends, interest is automatic. It's not a case law. It's the section itself says, section 75 says, yes, interest is automatic. You must reverse it with the interest. And intimate to the department concerned that, look, I have reversed this ITC. But If the person says it is genuine, then you must take, considering the cost and the element involved, must take it for a writ remedy to the Honorable High Court. And it is not the case. Many, almost 95% of the cases that have been booked by the departments have come out with some clean hands. It is not like that. And sometimes we say the other person, he has given a statement that yes, I was involved in fake invoice transaction. Friends, it is not so that he was involved in a fake transaction. Might be he has done fake invoicing but 50%, 60%, 70%, 20%. Your case can be in the case where the fake invoicing was not involved and you were a genuine buyer. You must fight for it. Why I am saying so? This will not only bring the tax impacts in GST, but it will be considered as a bogus purchase, unaccounted, unauthorized purchase for the purpose of income tax also, thereby disallowing your expenditure of purchase also. And if it is after 2020, 271 AAD penalty provisions will also be invoked there. And sir, there the entire purchase amount is chargeable as a penalty. Here it is 100% of the tax amount, then there it is 100% of the purchase amount that will be considered as bogus. And you know, now all the departments are interlinked. So all these provisions must be, you cannot say I've done this to buy the peace of mind. No peace of mind will come. If you say that, right, I am paying it considering this, you must mention that you accept it or you are not accepting it, because accepting as fake invoicing can lead to other tax implications also fall onto you. So in this case, yes, one thing can happen. Department may proceed. If you say I have already reversed it with the interest, you are intimating it to the department, and later on department can invoke the penal provisions against you. But at that time, or a question you can ask, whether reversal amounts to never taking of the credit. See, for this we have certain case laws like Pratibha Processors, Bombay Dyeing that comes to our rescue, which says that reversing credit on his own without any receipt of the notices, it is presumed that it has never been taken. It is presumed that it has never been taken, but still those repercussions can come later on. But if you can come out of it also, so in case you are a genuine purchaser, it is nothing like blanket. If a person is found involved, he has given the statement, it is not like that everybody from purchasing from that person was involved in such sort of transaction. So if you are a genuine purchaser, you must go for fighting for it rather than accept it. Now, if I move further in this transaction only, yes, sometimes what I find that people hesitate in giving the evidences and the documents. Friends, let me tell you, you must give the evidences and the documents on the receipt of the notices if you receive summon. See, burden of proof that the transaction is fake lies on the department, but you are the person who has to prove it, that these are the documents that are available. Whatever information has been called by from you, you must provide that. That will be helpful in the later litigation stage also. So you must provide the documents and the evidences. Now, if I come to you, what should we ask our client? That, okay, Mr. Client, you provide us. Sir, for goods, it is relatively easier. Why? For goods, you have a proper trail available. You can have transportation documents. If that has crossed the barriers, you may have toll receipts. So for goods, it is relatively easier to prove the trail. You can have e-way bill, vehicle number, toll receipts, transport documentation. For services also, it doesn't leave trail, but you might have. For example, if I say it was an advertisement services, you can have the copies of the hoardings, etc., etc. So your point that yes, you are in the possession of documentation must be provided beforehand on receipt of any such notice or summon or whatever information has been called from you. So if I talk about, friends, we also caught certain transactions fake invoicing when we were doing our GST audit. Let me share that incident with you. At that time, our client, he had a turnover of around 300 crores. So what we noticed that in some of the bills, we just randomly picked a few bills and we checked and traced the vehicle number. And when we checked 100 kgs, tons of material coming on, and the vehicle number was of a scooter or was of a two-wheeler. So it shows that the transaction was not genuinely done. So vehicle number at present is also one of the most important documents which you can refer even otherwise to check whether the transaction is genuine. And you just put the vehicle number. There are various apps available. You get the entire details, even about the owner or everything. So all these points must be done with the due diligence. Right now, if I come to the statement, sometimes a person comes to us and says, I have given a statement that yes, I was quite afraid. I was under undue influence. I was under caution. I was not in a proper state of mind. I give the statement, okay, I have taken it. The quantum was this or that. It is not like that. If he has given a statement, it cannot be retracted. If you find that the statement has been given under undue influence, it is under duress, it is under caution, or it is under any sort of undue influence, then it can be retracted. But make sure the retraction must not be delayed. There is a judgment by the Honorable Supreme Court in case of Vinod Salanki, which clearly mentions that statements can be retracted, but it must be retracted within a period time frame, within a reasonable time frame. It's not like you received a statement copy 6 months ago and now you are retracting. That can be taken as an afterthought. But doing it within a span of 10 days, 15 days shows reasonably good that it was under some duress. So let me ask you a question. Let me go back by 1 point. And if I ask you, friends, can a retracted statement be relied upon? Can a retracted statement be relied upon? Friends, the retracted, first of all, there is section 136 under GST, which talks about the relevance of the statement, that how much the statements are relevant. But if I talk about the retracted statement, yes, it becomes weak. It becomes weak. It needs corroborative evidence to prove its point, but still it can be referred or used by the department. Right, Sanjay ji? It can be used or it can be referred by the department concerned. So if the statement is under caution or duress, it is the burden of proof lies on the person who claims it. It will not be presumed that yes, my statement was made under caution or duress. And one thing more, friends, whenever the summon comes to you, to your client, and you go for that, always check the quantum involved. If the quantum is above 5 crores, so it means it can invoke, it can be covered under the provisions of arrest. If it is a smaller amount, below 1 crore, the provisions of arrest does not come into picture. 1 crore to 2 crores, and then 2 crores to 5 crores, and then above 5 crores. So the quantum is different. Generally, department goes for arrest when the quantum is above 5 crore rupees. 5 crore rupees. So in this case, it is not mandatory. So if I say always check for arrest provisions, that whether those, and accordingly one should move like. But I already mentioned, it is not always that you should go for anticipatory bail. In economic offense cases, the anticipatory is very difficult to get, and in case you don't get it, then the department will be out, sitting out to arrest the person concerned. Right? So it is not mandatory. Coming to your question, Mr. VMB, that whether it is the chartered accountant can appear or not. So let me talk about it. It is not mandatory for a person to make statement. Okay, you talk about a chartered accountant. I first of all says, it is not mandatory for me, the person, the client, the person to whom the summon is issued. I will not use the word accused. Summon can be issued to any person. Section 70 says any person. Now the question comes, to whom the summon is issued. Let's suppose, Mr. Subbarao ji, that if the summon is issued to the client, then can chartered accountant appear? The answer is no, and it should not be done. The summon must be, should be attended by the person in whose name it is issued. But yes, if a chartered accountant is summoned for a particular client, then he will appear. But now let me first talk about the point that even the client who has been summoned may or may not give a statement. He can say, I will not give the statement, or I will give it later on. I don't have any facts on records. I am not the, every time the owner does not know. Every time the owner does not know what are the operational aspects. So he can say, I will provide it later on, or Mr. Employee will provide the issue. So in that case, even the person appearing for the summon can deny giving. It is not mandatory for him. But if he gives the statement, that must be correct. Why I'm saying so? He has a right to silence. He has a right of silence. He can exercise that right. Okay, I will not say anything. But if you say anything, in that case, you must say whatever is the truth. So talking about the tax professionals, no, they are generally not allowed. And it has also happened that you are talking about appearance on the behalf of client. I am talking about they are not even allowed to be present when the statements are being recorded. Even in a few matters which I handled, sometimes they allowed us in the cabin. Sometimes they didn't even allow us. Sometimes even in the few custom judgments, they allowed through the visible distance, not the hearing distance. They were allowed through the visible distance and not the hearing distance. The authorized person could see that yes, his client statement is getting recorded, but he was not able to hear what actually was going on. So there are contradictory views available, that in some of the cases that yes, a few judgments says that it should be, they have allowed it. In a few, they have allowed the visible distance, not the hearing distance. So, and one thing more, let me tell you, being a chartered accountant, it is not advisable also that a person should appear on the behalf of client. So it must be the client who is responsible, who should appear for it. If the summon is in the name of MD, then he can say that I am not a right person. Sir, giving a wrong statement is more dreadful. If the MD is not in the possession of a particular information, he can say, my so and so, he must appear. He must not give a wrong statement, because if he gives a wrong statement and later on his employee is examined, there will be a mismatch between the statements. And let me tell you, practically, the department matches each and every statement. This is what the purpose of statement is. So you must be very, very sure whatever you are saying is correct, or either you don't say. You can refer that a particular point in my office, in my premises is being handled by so and so person. The statement of so and so person must be recorded for this purpose. Now, if I talk about a chartered accountant is only and only filing the returns, can he be made liable? So my answer to this is no. Neither is a person covered under 122 1A. Moreover, if the client has been found involved in any sort of 20%, 30% transactions, which have been found to be fake invoicing, bogus transactions, the chartered accountant cannot know all the operational aspects. But if it is found involved that yes, The entire business, there was no existence. The numbers were not, and he has been found guilty somewhere, then he can be charged under other sections like 122(3), where there is a penal action of up to 50,000 rupees. But for 122(1)(a), he must be a beneficiary to transaction. If he's not a beneficiary, he has merely invoked the transaction, he has got it done, but is not considered for the fit for the conditions imposed in a 122(1)(a, then a minimum amount or some amount of penalty can be levied upon him for abetting the offense, but otherwise he should not be. Now, whatever, sir, in the beginning, I always mentioned that whatever documentary evidences you have, you must furnish. And if it is found that whatever documentary evidences and other things that you have furnished, but the department has not considered those, then it is against the principle of natural justice. And trust me, if you go for further litigation, it will be clashed at that point of time only. So submissions, the proper submissions are very much relevant. This I've already talked about, and that is anticipatory bails. That yes, anticipatory bail is a very, very important decision. It must be taken very cautiously, especially when the high stakes are involved and the persons are not getting the anticipatory bails or the bails. Friends, let me ask you a question. I've been speaking for so long. Let me ask you, for what is the limit for offense becoming non-bailable in GST? Okay, let me start from here. What is the limit of the offense? What is the limit? So it is 5 crores. If the offense is, and what is it is ITC, tax involved, not the quantum of sale or purchase. It is the ITC or the tax involved. If it exceeds 5 crores, the offense becomes non-bailable. Now my next question comes to is, can you say that non-bailable offense, the person will never get the bail? Is it so? No, it is not the so. Non-bailable offense means it is the discretion of the person concerned, the judge, the magistrate, the session judge, that whether he will be giving bail or not. Right? So you have, and one thing more. If you have been insisted something, you must have read the case laws that came a few months back, where they said that the search team put an unnecessary pressure on the client to go for the surrender, and those search proceedings were cancelled. So if you find anything which is against the principle of natural justice and which is not adherence to the norm concerning the ladies, like, if the only ladies are at the premises, it cannot be conducted after sunset and before sunrise. So if any such matter is found, one can refer to the Human Rights Commission also. So all these norms of natural justice, etc., must be followed. I talked about that you say I am receiving the simultaneous. Friends, the intelligence department, let me share one more issue with you. The intelligence department, the investigation wing, for the investigation purpose, have been given all India jurisdiction. They have been given all India jurisdiction through a particular notification. So if intelligence department notice come, it's okay. And if you want to challenge it, that I am already under state, how intelligence is giving, then you need to challenge that notification. Otherwise, intelligence department has jurisdiction across India. But if you are receiving the simultaneous notice from center and state, like I told you, it happened in many of the trans 1 cases, then a person cannot be put prejudice to the adjudication under both. I have cited a few case laws. These are the classic case laws which can be referred, that in case you have been subject to any sort of transaction, it can be challenged on the grounds of violation of Article 14 itself. Now, second point that comes, that what can be the maximum detention period? If no investigation has taken place, the maximum arrest and detention period can be 60 days under CRPC Act as per section 167. right? And one thing more, recently we have seen the judgment of Vimal Yashwangitri Goswami by the Honorable Gujarat High Court, and we have the judgment by the Honorable Supreme Court, Apex Court, in case of Naresh Mangala also, that bail is the rule in India and not the jail. But what we have been witnessing in recent times, that the jail has been made the rules. Arrest the person. Whereas in case of Naresh Kumar Mangala, Supreme Court judgment, it has been clearly held that if a person is found cooperative, there is no need to arrest. A lots of care must be exercised to make these provisions at this point of time, to bring it to go for the arrest. Don't worry, my dear friends. I'm seeing a number of messages falling in where you have been asking for the presentation. This has been made for you only. So I will be sharing the presentation with you all. So don't worry about it. And our SIRCC is kind enough to share it with all the members. So it will be shared with them. Right? Now, moving ahead. You asked me whether a professional merely filing the returns, can he be arrested directly? The answer is it cannot be unless he has been found guilty under 122 1A or found abetting only. So then a minimum penalty amount can be done, but that should also be substantiated, otherwise no. So fake invoices cases, as a counsel, they are challengeable. It is okay. Sometimes one more question pops up in our mind. A client comes to us and it's a fake invoicing case. Being chartered accountant, we are always like, should we take this case or not? Why not? If a murderer, after doing a murder, comes to a lawyer and says to fight his case for him, there might be certain circumstances. So is the lawyer being found guilty? No. It's his duty to defend. And when it's his duty to defend, likewise, it's your duty to defend your client if you find him right or whatsoever. So in that case, I don't say that you should support fake invoicing, but yes, you cannot say if your client is genuine that you will not be taking the fake invoicing case. If it is genuine, you must go for it. You must defend your client. Outcomes can be any. It can be in anyone's favor, right? So, but defending the client is your duty and nobody can stop that. Now, this was our topic of fake invoicing in detail. I know you have a number of queries falling in that we will be taking at the end of the session. Now, after fake invoicing, we have another very, very important topic, which is ITC, input tax credit. But friends, when I was making this PPT, I thought, why not to share with my friends the latest judgments, the latest updates also. I'm not going to discuss these. But I have put in here where I have made some in-depth analysis. Okay, dates are also there. But apart from that, I have put in certain practical case studies, that how we have to apply Rule 36(4), how the compliances for which it has been extended, for which it has not been extended, and other than that, a topic related to real estate that has recently been taken, and it is also related to input tax credit. And as our topic is input tax credit, I am sharing this case study, which is recent change, wide notification 3/2021. So after fake invoicing, we are heading towards ITC, but the burning issue in ITC, which just came in notification 3/2021 with effect from 2nd June 2020-21. What is the transaction? Friends, if I talk about this transaction, let me discuss first the basic idea to you. Friends, if I talk about the input tax provisions or the real estate provisions, so we have various models. We have township model, what we call township as. Only a land is converted into a developed land. You can see it in the picture also in front of you. A vacant land converted into developed plots. GST demands tax on it. Whereas the matter is quite litigated because sale of land is the part of Schedule 3. Land is a land, whether developed or not. Tax should not be charged on it. If a land is selling for say 50,000 rupees before development, and if it sells at 55,000 rupees after development, the land is land, the value has increased, but it is sale of land, it should not be covered under GST. This is the one view. The other view with the department takes, there is some value addition, and that value addition is on account of development. That are the development charges that have been recovered. We have various judgments, various AARs, mark spaces. Then we have the Honorable Supreme Court judgment also in the pre-GST regime. So in those cases, it has been held that it is development charges, and a particular portion, in some cases they have taken 25%, the valuation has been done, and they have put it through tax at the rate of 18%. So this was the talk about township model. But right now we are not dealing with this model, but I give you an idea so that I am able to make my point with more clarity. What happens now, friends? Generally, when the notification comes, we get lost in the dates and all. You know, preparing date chart after the COVID has become a big task, right or wrong? You must have always also taken the printouts and pasted in your office. Okay, this is the chart. Now these are the due dates. This is how we have to proceed and all. So, but the main issue sometimes get lost when we go for it. So talking about it, if I talk about the joint, okay, let me ask you a question. The person is having a land. This question is very relevant and day-to-day practice. A person is having a land. Let's suppose Mr. L is having a land. He is making a building on it. He is making a building on it. Now, Mr. B comes to him and says, you sell this building to me. It is a single house which is under construction. Mr. L purchased the land. He's constructing a building. For under construction building, Mr. B comes and Mr. B says that you give this land to me, to sell this building to me. Now, my first question is, this single residential unit being sold, he gave him the advance of 1 lakh rupees. Advance of 1 lakh rupees for an under construction building. My question to you is this transaction taxable under GST or is this exempt under GST? Is there any exemption for sale of single residential under construction building under GST? Yes or no? I will not say after construction, because after construction it is not covered in the GST due to Schedule 3 that you all know. No GST on single residential. This is what the answer I was looking. But Sri Ramji, please check. Please check. There is no such exemption in GST regime. It is a taxable transaction. It is a taxable. Even the works contract where land is not involved. What is the difference between construction and works contract? My dear friends, works contract and construction, otherwise in the law, they have made it that construction is a part of works contract, but specifically 5B entry deals with construction and 6A of Schedule 2 deals with the works contract. 5 works contract mean land is never involved. Yes, land is never involved. Not yes, Mr. Keshwa, you are very right in mentioning only the labor charges are exempt, not even works contract. This is the point I was coming on to, Mr. Keshava, that it is only the labor charges of a single residential unit that are exempt, not even the works contract. Works contract covers when there is no land. I share an example with you. Mr. B says, I have my own land. You construct, material yours, labor yours. So material yours, labor yours, that's a works contract. If I say land is mine, I am constructing. This example which is in front of you is a construction 5B. Huge difference, my dear friends. For construction, the refund of accumulation is not available in 5B. But 6A, works contract, is eligible for refund. And generally, these contractors have refunds lying in between. So this was the point. Only the labor charges are exempt, not even works contract is exempt. So not the sale of single residential unit is exempt, but right now we are talking about the JDA, complex being constructed, and now RERA is in picture. So joint development agreements can also be of area sharing basis or revenue sharing basis. If I talk about what is area sharing and what is revenue sharing, there is a person who is a landowner. I have to rush on this topic because it's a very lengthy topic and I have to cover the other topics. So I'm just giving you an idea what has been the change. Friends, in area sharing, the promoter does not have money. The builder does not have money. They are not going to pay each other in the consideration, cash consideration. No. This is okay. We share it in the ratio of 40-60. 40-60. I take 40%, you take 60%. Right? 40-60, like this. Revenue sharing, what happens? He will sell his 40, he will sell his 60 flats after construction. But in revenue sharing, what happens? This is, promoter says, I don't know how to do all these things. Mr. Developer, you sell to the buyer, whatever consideration comes, that we will be sharing together. This is a revenue sharing. They may form a JV, they may not form a JV. Now, what has been the change that has come? My dear friends, in this transaction of JDA, like the one in front of you, there are 4 transactions involved. But there are 2 transactions which are non-monetary and are barter system. Please have a look. It's a barter system. What? Landowner is giving a right to the developer. 60% land is yours now. You construct, you sell on it, you do whatever. On means he has given a TDR of 60, equivalent to 60%. Given, they don't go for the registries because that involves registry charges. So they enter into an agreement which is called as JDA, and 60% of the land is transferred to developer by a JDA agreement. In lieu of that, he does not pay the monetary considerations, non-monetary, and he says you get this constructed. So my dear friends, what happened? There are 2 services. Although TDR levy is a questionable levy, I'm not going into that. Questionable levy, but law says yes, it is taxable at the rate of 18%. We challenge it. It is sale of land. It is in the nature of sale of land, how you can collect the tax. But as of now, it is taxable. For TDR, landowner is the provider, recipient is developer who is going to construct. But for construction, the situation is vice versa. Provider is the developer and recipient is the landowner. Problem lie here. This lied here, for which the amendment came. Now, what was the problem? Because initially the consideration was not involved. This person was given the time of supply completion. As a result, this person, landowner, was not getting ITC. He was not getting ITC. Amendment brought in. Time of supply has been shifted, and now this person, landowner, because pehle kya tha, what happened? Output used to be earlier, input used to be later. Now they have amended the time of supply, and now what happened? Previously he was not able to use it. Now he can use it, and time of supply has been shifted. This person has been allowed to use ITC, which is resultant from the construction service. So the change has been brought in the TDR and construction taxability relating to input tax credit. Now, moving ahead to the direct ITC provisions. Friends, if I talk about the ITC provisions, let me just, this rule I have already discussed with you. What is that rule? Now, let me ask you a question. If I say that a particular invoice, section 16 conditions are fulfilled. Section 16 conditions are fulfilled. Please listen carefully. But the invoice is not reflecting in 2A or 2B. Will you advise your client to take the input tax credit? Will you advise your client to take the input tax credit? Sriramji, I would love to have go for it, because as my topic is related to ITC and the revenue sharing, it itself is a big concept. So I just discussed the relevant provision relating to ITC only. So I want you to excuse me today for that, and we will discuss in some other one when we will talk about real estate. Okay, so I'm getting the answers no, yes, because 5% is there. Okay, friends, let me tell you, the government has implemented the provision, two draconian provisions which I called as, if after 1/1/2021, 1/1/2020, I'm not talking about any judgment, I'm talking about the notification itself. After 1/1/2021, I will not say my client to take the credit. Otherwise, if he wants to go into a higher level litigation, he can go. But if you don't want to go for litigation, then you are not suggested to go for taking the credit. And after the budget gets implemented, it will be all more no. Now I tell you one thing. Let me ask you why I'm saying so, or let me ask you a question. In GST law, in act or rules, where you find 2A is referred or 2B is referred as more authenticated document. I'm asking you, 2A or 2B, which one the law refers? My dear friends, no one. Don't give me answers 2B. It is no one. None of the document, neither 2A nor 2B. If I talk about Rule 36, Sub-Rule 4. Rule 36, Sub-Rule 4. Friends, it talk about that, listen, it must have been shown by the supplier in his return. It talks about supplier GSTR1. So direct way, never 2A or 2B was referred. Absolutely, Sanjay ji. First time in the budget, section 16, subsection 2, clause AA was introduced. No, Keshwarji, neither 2A nor 2B. It referred, it must have been shown by the supplier in his return. So neither 2A nor 2B, first time the words are introduced in the budgetary session mentioning must, and it must have been shown by the supplier in his GSTR1 and communicated to the recipient. Only this much. First time 2A or 2B in the budgetary provision, which are not yet notified, have been brought in. And there also, they have not specified 2A or 2B. So if I refer to law, see, 36(4) took a backdoor entry. It was without the backing of any act provision. After that, it mentioned must have been shown by the supplier in his GSTR1 or IFF. It doesn't refer to 2A or 2B. Now, through the budgetary amendment they have brought in, along with that, on 1st January 2021, while the notifications that came in December, they said, if it has been found that you have been taking the input tax credit, which is not matching with your 2A or 2B, your number can be suspended. So my dear friends, never advise your client, because see, what happens? First it will be suspended, and then it will be intimated to you in GSTR REG 31 form, which is now not there. They have issued an SOP, okay, that these forms can be used. I put in the SOP there, but firstly it will be cancelled, and then you will be intimated about it that your number has been suspended. And it also leads to suspension of your e-way bill also. Sir, before this recent amendment of May, the person whose GST number was suspended, his e-way also got suspended, and he was not able to get the goods neither as a recipient nor as a supplier. Means he was unable to do e-way bill. His number could not even be quoted as a recipient, he was able to generate as a supplier. Now they have opened it as a recipient, but as a supplier, his e-way bill will remain blocked, suspended till the time his number is suspended. Now what will happen? Now after that, you will come, the client will come to you, my number got suspended, then you will file a reply, and if officer feels okay, it is fine, there is nothing ungenuine, or if he is satisfied, he can open the number, he can remove the suspension. So it's a huge harassment also, so be careful if it is not appearing in your 2A. Moreover, I already told you, if there is difference between GSTR 1 and GSTR 3B, law came up with the provision. They also issued a document, myth versus reality, if you remember. They said that we actually want to get hold of the fake invoice people, but even the genuine taxpayer. Friends, you all have witnesses. Rule 86A, blocking of credits being highly utilized by the department, that too. So they have mentioned, see, if your number, if your output in GSTR 1 is greater than your 3B, your number can be cancelled. Sir, in cancellation, you will first receive the show cause notice for cancellation, and then the number will be cancelled. But in the other case of suspension, if your GSTR 1 and 3B are not matching, or your input is not matching with 2A or 2B, then in that case, your number will be suspended. Before it will be suspended, and then intimation will be given to you that your number is suspended. You please come up with this, because opportunity of being heard has been deleted from suspension. Now, friends, in this case, if you ask me 2A or 2B, sometimes many people ask which one is more authenticated. My question to them is, you need to analyze. These are the two sides of the same coin. Why a particular invoice in 2A and not in 2B, or in 2B or in 2A? This can be due to the time lags. If a person, let's suppose I take the example, Mr. Keshava, I entered into a transaction with him. He was busy on some celebrations in his family. He filed his return late. Now what will happen? When he filed his return late, it will come in my 2B of that particular month. But it will not 2A of that particular month, but not in 2B of that month, because 2B is on real-time, 2A is on real-time basis, and 2B is based upon a particular time frame from 12th till 11th, from 14th till 13th. So what I do, practically I tell you, in my clients, we open a ledger in the books. When bill comes, we enter into input tax credit, because this session is a practical, so I'm discussing how we practically do it. We open a ledger in our clients' books. Whenever the bill comes, purchase comes, let's suppose we put it, purchase debit, input tax debit to so-and-so creditor. At the month end, we reconcile it with 2A, 2B. First, we find out the reason of differences between 2A and 2B. If the differences, you have already taken the credit, the person is late in filing his return, that credit becomes ineligible. Or if he is put in 2B, please mind it, he is put in 2B, but you have not received the goods are in transit, that credit is also to be segregated, not eligible as of now. That is not eligible credit. 105% not to be taken for it. Analyzed to be on bill to bill basis. And what in books we did, let's suppose we have made a purchase. It is not appearing in my 2B. I open a ITC ledger, deferred input tax credit. I put it from the input, I transfer it to deferred ITC. Next month, when that comes in my 2B, let's suppose Mr. Keshwa's bill. Now next month it reflected in my 2B. Now I will again shift from deferred to the ITC. So huge number of transactions can also be managed in this way by making changes in your own books of accounts and opening a deferred ledger. Friends, this has to be done, and this should be done because what is the intention of the law? Credit will be eligible. Input tax credit will be eligible only and only if it will appear in 2B as of now. Otherwise, if you want to go into litigations, there can be various judgments. You have received a number of judgments. Some of those might have been stayed. But, sir, the officers don't consider the judgments directly. For them, you either have to go to litigation to get your point proved. But otherwise, this is the normal way of dealing with the regular returns without, sir, in India, only 1% or less than 1% people go for litigation. Rest all wait. Let some decision come and then that will be applied. So is it not the case of VKC footwear or Odisha High Court judgment in Safari Retreat? All those are like that. So my advice, if you have to compare 2A or 2B, what are the reasons? And then compare it with your books of account. And for the eligible ITC, you have to do 105%. Right? Moving ahead. 105%, you all know. Now this is the figure they have given. This I have already shared, that if your GSTR1 now be blocked, if you are not filing your GSTR 3B. Friends, this is the budgetary amendment related to input tax provisions that came. First time and point was introduced. And first time it came furnished by supplier, communicated to the recipient. Still, it does not mark 2A or 2B. It cannot. Sir, law can never directly write 2A or 2B. My question to you is, let's suppose a credit is appearing in your 2B. You don't have section 16 conditions fulfilled. Yes, of course, Ramji, it is there. So you don't have section 16 conditions fulfilled. Then in that case, you are not eligible to take the credit. So how law can refer whatever is appearing in 2B, you can take that? No, you have to make the analysis. So likewise, some people say there are judgments. There are against judgments, there are favorable judgments. Sir, trust me, even if there is no against judgment, until or unless it becomes the law of the land, the officers are not accepting it. If you go for the refund application on the basis of VKC footwear, had there been no judgment of Madras High Court in TVS Transfer Afcon Limited, still it was not easy for you to get your refunds done. So this is and friends, this is a budgetary amendment which has not yet been notified, but for the first time now what will happen? Sir, litigation was going on. Rule 36(4) has no validity. They tried to give the validity, and friends, the day this budgetary amendment will come into picture, the additional 5% will also go away. That will also go away. That it will be whatever is appearing in your 2A, you will be eligible, or 2B, that will be eligible, otherwise not eligible. Yes, even the block credits, you have to calculate the eligible credit. You cannot take it for the cars or for the repairs and all. You cannot take those. So through this budgetary amendment, they tried to provide a validity to the provisions. But this is not a retrospective amendment. So the cases that are already going on, friends, sometimes we feel, I have paid tax to Mr. Keshwa. He is busy in some function at his place, at some ceremony at his place. Why my credit is getting delayed? There are a few judgments, many judgments, I should say, in the pre-GST regime, made by KK Industries by the Honorable Apex Court, made with the Delhi High Court judgment in case of Arise India. All those says you cannot ask the impossible. I can control my transactions. I cannot control Mr. Keshwa's transactions. I cannot force him. You come to office, you say to your chartered, you get your returns filed. No. But yes, something which is beyond the control has been asked that needs to be challenged. I know 2A, 2B non-appearance can be a problem like in this case. But all these points must be considered. And as of now, this is the law until or unless it is challenged or revoked through any judgment. Moving ahead, when we are talking about the ITC provisions, sir, I will continue the deliberation for another 10 minutes, covering few important changes, burning issues, and then we'll hand over to you for the query or whatever, sir. Is it fine?
Okay.
Okay. Friends, Rule 86B, many of you mentioned, this is the legal provision that, listen, there is a registered person, you have to check the taxable monthly supplies. Monthly taxable supplies. Friends, 86B, if I ask you now, how many persons in your office are covered by the provisions of 86B? The answer is you cannot answer. Why? Every month it will change. Ho sakta hai in this month the person is crossing 50 lakhs. In another month he's not crossing 50 lakhs. So in this month he's covered. So it's a monthly provision. You cannot do it 50 lakhs multiplied by 12. No, 6 crore. No, not at all. It does not cover your exempt supply. It does not cover your zero rated supply. Now, whatever is your taxable supplies, if it is greater, if it is exceeding the 50 lakh rupees, you can use only 99% of your credits. 1% has to be paid in cash. Now, certain exceptions have been given. Sir, whenever you read the law, always read it through the reason why it has come into picture. And if I talk about the reason, this legal provision was introduced to curb the fake invoicing. As a result, they said if it is found that yes, you are a good income taxpayer, maybe it is through TDS, maybe it is through MAT credit, whatsoever. If you have been found, you, your company, your directors, your two partners, your managing directors have been found paying income tax exceeding 1 lakh. Okay, you are through. This provision will not apply. It means you are genuine. 1 lakh se upar you are paying tax means you are genuine. Okay, if you have taken refunds in the past year in GST exceeding 1 lakh rupees, maybe due to inverted duty or maybe due to exports, this provision will not apply. If already in the preceding months of the year is going on, in the preceding months, you have paid already 1% tax in cash, this provision will not apply. And it does not apply to government departments because they cannot be fake. Now let's see this provision with the help of a particular case study. There is a registered person. Now see, in the February month, the turnover is 1 crore, but it is exempt, not to be counted. Export, not to be counted. Taxable is only 45 lakhs. 86B not applicable. For the same person in March month, taxable is 1 crore. 86B becomes applicable. It's a monthly provision. Moving ahead, if I talk about, now let's see, this person has 1 crore transaction. Had it been the old law, he would have paid no tax. Now he must have to pay 5,000 rupees in cash. How he can escape? He can escape covered by the exceptions. Okay, for past 2 years, friends, I have mentioned the years also. He has paid the income tax exceeding 1 lakh, or the company has paid, or the directors have paid. They have taken the refunds exceeding 1 lakh in the past year, and or in the same year, any of the condition. If you fall under exception, you are out. This was the third condition. This is which month? March 2021. In this year, already from April to Feb, he has already paid greater than 1%. In first case, he has paid 1%. No, not covered. New rule will apply, not covered by exception. In second case, he has paid more than 1% already in cash. For the March month, this rule will not apply. He will be under the old rule. Other than this, friends, I have also made 3 illustrations. Because sometimes the question arises in our mind, do we have to proceed headwise or in totality? So I have made the proper illustrations that what can be the different scenarios under 86B. Or friends, generally, the new companies, or the new entrepreneurs, the startups, they fall because they have not paid the income tax also. They have not taken the refunds also. So for that, there is a second proviso, which I just showed you but didn't discuss. And this, if you are a genuine person, rule 86B getting applied on you, please write a letter to the commissioner and ask for the waiver. A fake person will not go, but a genuine person can apply to the commissioner that rule 86B should not be made applicable on me. So these are the certain ITC related provisions which are very, very burning issues. Apart from that, friends, the most important change is in refunds. Before these, the refunds in case of exports was given 2 ways, with payment or without payment. But recently, with payment of tax, huge scams have been found. So they have made the custom provision as stringent also and otherwise, and now they have said that the with payment of tax will not be available. It will be available on for notified. But my dear friends, this provision is only a budgetary proposal as of now. It has not been notified. So as of now, you can get the refunds with payment also, without payment also. And especially, I always say to my clients that if you have capital goods underlying, then go for with payment of tax. Otherwise, without payment of tax is a better option. If you have capital goods, because with payment of tax method leads to encashment of capital goods. But that is also now left for a limited period. The day these proposals will be notified, exports refund will be available only and only on without payment of tax basis. Moreover, they have also linked the exports with the realization of foreign exchange. Sir, in GST, exports were never linked to the realization of foreign exchange. Not in the definition. Yes, services were linked. Export of services were linked, but not the goods. Now they have mentioned the export of goods. What will happen? They will give you refund in case of export of goods. You will get the refund. But when you get the refund, if the exchange is not brought within a period of 9 months, you have to return the refund along with interest thereon. And what is the difference? Friends, listen. In services export, you never get the refund till the time you furnish BRC. In export of goods, you get the refunds. You get the refunds, but you have to return it. And in services, the period is 1 year for bringing the foreign exchange. In goods, it is 9 months. In goods, there is additional benefit. If after 9 months, you get the foreign exchange, you can again apply for the refund. Refund given, taken back, you can again apply if you realize. But in services, rule 96A applies. And you can never get the refund. If after in services, even if the foreign exchange is realized after 1 year. Friends, there are a few provisions in refunds that have, but considering the time constraint, I'm just want to discuss 2-3 points regarding e-invoicing, which are very, very crucial. But one thing I want to bring, that in refunds now, when you go for export refunds, the definition of exports has been changed. I have quoted a practical example here. Whatever material of the same quality you are supplying in the domestic market, the export cannot be more than 1.5 times. 1.5 times of that. So this is the condition that has been invoked therein. So whenever department will calculate your refund, they will recalculate your exports and thereby recalculating your total turnover and the refund amount. If your export is more than 1.5 times of domestic supply, your refunds is going to be reduced. Other than that, if you have done any mistakes, sometimes what happen, export being shown as normal supply, a window is open for all of you from 1/7/2017 till 31st March. If any such mistake has been done, still the refunds will be available since beginning, and the validation check has for the time being has been removed. Now talking about the e-invoicing provision, friends, the limit for e-invoicing now is 50 crore rupees with effect from 1/4/2020-21. B2, it is applicable only and only on B2B invoice. This is the site which is working. How we have done in nowadays, the Tally, the SAP that gets directly connected to the e-invoicing portal, the bills get uploaded. E-invoicing is applicable only and only on B2B invoices, not on passenger tickets, cinematography, SCZ units. No, not applicable. Yes, it is applicable on B invoices and their debit notes and credit notes. Friends, always remember, an e-invoice can never be amended. It can be cancelled, but it cannot be amended. So the B2C, for B2C we have QR code, but the QR code, the limit is 500 crores. So B2C invoices, B2B invoices are covered under it. And if this is the site of e-invoicing, this is how much you have cancelled shows here. This is how the e-invoice look like. This is the number, e-invoice number. And sometimes people ask, can we dispatch the goods without e-invoicing? No. If you are liable for e-invoicing and you are not doing the same, it will be considered as you are not issuing the invoice. So it must be accompanied with the supply. E-invoicing, this QR code also appears. And sometimes people ask that if I am sending it to my own branch having different number, will e-invoicing be applicable? Yes, it will be applicable. It will be applicable, right? So whether this and you have to get, and whether if we consider whether SCZs are covered, yes, SCZ developers are covered. Only SCZ units are not covered. So these are the few points which were very, very relevant as to invoicing. I end up my deliberation here. And one question which I could directly see was, I knew it, I skipped the point, but due to the time constraint, I skipped that. And that was 1.5 times of turnover if that is not domestically available. It can happen. I am just supplying the goods outside. I am not supplying, exporting the goods in India. So similar supplier, example, my own client is dealing in basmati rice, exporting out of India, but it is not he's not supplying domestically. So in that case, you can take it for similar supplier. And sir, let me tell you, this provision is not so easy for practical implementation. So department generally takes it, but you can fight on the issue that the quality is different or something is different. Still now, sir, the transfer pricing provision in income tax could not be implemented. The domestic transfer pricing they have removed. So the provision is there. Yes, if your client is supplying both ways, it can be easier. But if it's not, then similar supplier. If similar supplier is not available, then there is a question mark. No mechanism has been provided. Right? Over to you, sir. E-invoicing, sir, I'm now reading a few queries that are flowing in. E-invoicing is not applicable for exempt supply, Mr. Srikanji. But to calculate the limit of 50 crores, 100 crores, 500 crores, aggregate turnover is to be taken. That has to be added. But e-invoicing, particularly for exempt supplies, is not required. Over to you, sir.
Thank you, madam.
I just,
Excellent presentation. And
I'm so
Selva,
sorry for exceeding the time. Actually, the topic went a bit longer, so
we will do
my
one thing.
apologies for the same.
10 minutes you take for the clarifying. If others left out, will you be able to answer them by mail?
Sir, I will share this entire PPT. Okay, yes, you take the queries, whatever will be possible. Otherwise, I will try to, they can contact me and I can reply them.
Thank you. Thank you.
I'll just share my screen. Is my screen visible? These were the questions
Yeah,
came
it
up
is.
in mail actually.
Let me now close the chat box and let me, yeah, your screen is visible. If a service provider who has filed LUT and exporting services without payment of duty, whether on case-to-case basis, whether they can charge GST. Yes, absolutely, Shri Hariji. Even if you have taken LUT, you can do one consignment under with payment, one consignment under without payment of tax. Particularly, and sir, if you talk about refunds in that case, the formula is designed like that. Your multiplier for export will change. If you take the input refund, you will take in the multiplier only that turnover which is without payment of tax. So perfectly you can do that. I hope you are okay with it. Oh, sir, the query is related to transition period of real estate. It is not at all linked. Itself is a very, very big topic. So I would like to skip this question too, as it is, the time is not permitting, and moreover, it is not directly related. ITC river, again, it is the real estate sector. Mr. A has already issued an A invoice and generated an AR. I have already covered this query, sir. Amendment in e-invoice is not possible. So what you can do, if you want to regenerate that invoice, put a dot, and that ways you can go for it. But amendment is not allowed, sir. It never allows the same invoice number. If fake invoice were
I compiled the questions whatever came up in the chat box. You just see which, if at all it's taken, we'll just skip the question. Okay.
Yes, sir. I'm looking at your screen. Are you going to close it?
No,
Close
madam,
it. You can just.
you already covered.
If at all it's taken, we'll skip that question. We'll move to next
sir,
one.
I have already covered. So you tell me when you want to close the session. I will stop taking the questions.
Only 20 questions are there. But
Okay, I just quickly covered that, sir. I just quickly covered that. I'm already on 7th one. In a fake invoice, so where material is not supplied between A to B, B to C. Yes, this point was already covered, that penalty can be recovered 18 into 3, 54. Tax must be only from one person. You need to litigate on that issue. The department asks from all the three, but that should not be done. Whether CA's filing already taken while the deliberation, CA's how we have to proceed professionally. If any fake invoices issued, such invoices to be offered as income. Of course, I already told you, in GST, ITC repercussions will come, and in income tax, the entire purchase will be disallowed. And if it is after 2020, 271 AAD will also come into picture. Failure to implement 2A was biggest control lapse. This is a comment, sir. This is not a question. But let me tell you, this is only after the introduction of GSTR 2A that the scams were found. When supply made to Mr. C and bill given to Mr. B, how will government find such transaction? Sir, when the record is brought in, the entire transactions gets covered. So this is actually the trace, the statements, when the cross examination is done, all these facts are brought on record. And sir, there might not be any proofs of see, you are supplying to one, giving goods to another, so how you will produce the documentary evidences? Until the existing ITC, which is already paid to the government by way of fake invoice, what is the loss to the revenue? Sir, the ITC, what is the loss to the revenue? See, revenue neutrality is one of the issue on which we have a number of judgments, but only revenue neutrality cannot be a point. So fake invoicing in itself is an offense. If it has not resulted into any revenue loss, still you can be charged for the same offense. What if taxpayer is genuine? I have already covered it. Please let me know how to file 3B in case of 86B covered, sir. 86 with practical example is covered. If invoice issued on A but bid supplied to B and full amount paid in GST or such situation also detected, yes, it gets detected. When you go for the statements, documentary evidences are not available, those gets detected. When GST is to be paid to government by supplier as reflected as in GSTR 3B, GSTR 1, how can be when GST is paid to government by supplier? By supplier in his 3B, GSTR 1, how can a supplier be charged for fake case? Sir, there can be scenarios. It is appearing in GSTR 3B, but there can be a bill, but there is no supply of underlying goods or services. So it is again a fake bogus transaction. In case of recording statements, generally department people ask the assessee to mention that statement is not under. Yes, they do ask, but if you, again I told you, the burden of proof that it was under undue influence by giving some medical certificate that you were not in a proper state of mind, that lies on the person who claims that the statement was under duress. So it is the person who has to prove it, that it was taken. You signed that statement because yes, they make it there, but you can contest it that I was under undue influence, so I did it. Can a CA already taken, a CA who is just filing the client's returns, if his certain transactions are found fake, the CA cannot be held liable until or unless 122(1)A satisfied, or he has been found abetting or invoking the transaction, he cannot be held liable. What are the journal precautions? You can sign the scope of work with the client, particularly mentioning, especially when you are dealing in fake invoicing cases, you can underline your liability by entering into an agreement. Last question is, GST officer insisted on recording of statutory auditor statement instead of assessee. Reason being, assessee not literate to under. Sir, that you should have contested whose name the summon was in, if that person. But look, in under section 70, summon can be issued in the name of any person, maybe the office, maybe the employee, may not be the employee, maybe the owner. If it is in your name, then he should have called you through a summon for recording the statement of a chartered accountant. If the summon was in the name of the person, then the statement could have been denied. Right of silence is there. There are some sectors in which fake invoice may be rapment. What are the such sectors? Sir, if you talk about the sectors, the rice industry is quite prevalent to it, because wherever you have wherever you have the ITC accumulation, cement industry, rice industry, those all are more prominent to this sector. So with this, I think so the questions are over. Over to you, sir.
Thank you very much, madam. Chairman, anything to share?
Thank you so much, madam. Thank you. You have handled very well. Though it is a new topic, you have handled very well. It shows your in-depth knowledge in the particular subject. Thank you so much. I request Banaraj sir to propose a lot of things.
Well, on this special day of maiden attempt by Aanchal Kapoor ji, very warm welcome to you again to SIRC at some other point, because your presentation skills are so good that only almost all the attendees remain till the last, till the end. You are using this technology, and because you are young, you could definitely make the difference in presentation, and your skills of presentation also are extraordinary. Even though I don't practice much of GST, I could understand many of the things in your presentation. A great thing. You have a good future, madam, and we may come back to you for the future also to handle the sessions at SIRC. A great maiden attempt at SIRC for you, and thank you very much for that on behalf of SIRC, and also on behalf of chairman and the office, back office, and also on behalf of GST committee of ICAI, because the chairman of the ICAI committee himself was present here, RK sir. In his absence, I thank him also for giving the right inputs for this program. And thank you, Mr. Selva, for giving technical support. And the members, a great thanks to you because to your support only we were able to do all these things. So in future, you will be a great asset to the institute, madam. Thank you and wish you all the best. So
Thank you
you
so
all.
much, sir.
Thank you.
And I'm very
Thank you.
thankful to the participants for their presence and for their regular interaction. Thank you so much for your each and every word. And I'm really thankful to SIRC for giving me this opportunity. Thank you.
Thank you.
Thank you so much. Good night. Be safe.
Night. Stay safe. Stay healthy. All. Thank you.